Howdy, howdy. Welcome to the November Trading Mastermind. I got an awesome guest for us today. I'm super excited to introduce you to him. But before we get to that, let's quickly get this thing out of the way. You all know this is our famous trading disclaimer. Make sure to read it. Pause the video if you have to and just sit here and read it over and over again. See if you can memorize it. I recommend printing it out even and posting it all over your house just so wherever you go, you'll walk past it and be reminded of it. Basically what it's saying is that we're not financial advisors. Do your own due diligence. Don't do anything that we do. And before you make any investment or trade of any kind, talk to your own professional and licensed financial advisor. All right, so now since that's out of the way, this is me. Y'all know me. You know, last time I put this question up and nobody answered it. I put it was like a little contest. I said, if you know what this line is from, it's a movie line, put it in the comment section below this video and you win a fabulous prize. And nobody got it. So I'm going to do it again. I'm going to cheat a little bit. I'm going to give you a hint along with it. So this is a line. It's a famous movie line. In fact, I think that the guest of today's video, I get the sense that he's a movie nut, movie lover like me. He'll probably get it. Maybe I'm wrong, but I'm pretty sure someone can get it. I'm going to add a little bit onto what I did last time, and let's see if we can get any winners on this one. So here we go. Here's the line with some sound effects added in. Fingers on a chalkboard. Y'all know me. That's it. You know what it is? Put it in the comment section below and you win a fabulous prize. All right, anyway, on with it. This is me, Boomer Dan. First name Boomer, last name Dan. And if you need to get a hold of me for any reason at all, here's my email, dan@boomertrade.com. Also, check out my website at boomertrade.com and you can get a hold of me there. And for those of you who don't know me, just here's a really quick introduction. I've been trading options since the 2000s, over 20 years now. Holy moly. I run a trading school at tradingschool.com, tradingskool.com. Check that out. It's free to join. Just go over there and sign up. There's a bunch of trainings and all my good stuff is in there. And I also have a YouTube channel. There's a ton of videos in there. Usually I'll try to get on there in the last 10 minutes of the day and close out my trades and record it. So check that out. I also run a Discord, a trading Discord with a bunch of really super cool members in it. We get in there and talk shop every day, post memes, tell dad jokes, and that's free to join too. If you'd like to join that, just reach out to me. No, I've been trading options for for 20 years now, over 20 years. And throughout the first 10 to 15 years, I was trading like credit spreads, naked puts, iron condors, you know, all the option income stuff. And then over the last couple of years, I still trade those, but sort of in a roundabout way. I create positions like this. I've developed my own strategy that starts off with those type of trades where I trade Zero-DTE options. And I start off with those type of strategies. That's how I initiate the position. But then as quickly as possible, I maneuver and adjust them into positions like this that are floating above the zero line. I call these levitation trades. And the whole thinking behind this strategy is to create these positions and get them to float above the zero line as quickly as possible so there's no risk in the trade whatsoever anymore. So this is my own strategy that I call the levitation trade. And you can learn more about that by going to my website, boomertrade.com. So that's the skinny on me. Now let's get to the good stuff, today's mastermind session. So today I'd like to introduce somebody who I've followed for a long time, Doc Severson. Doc, I was going to ask you, are you related to Doc Severson, the trumpet player?
Oh, that was Doc Severson.
Oh.
Yeah. which is everybody just hacks my name up because they assume I have the same last name, but that's all right.
Well, I followed Doc since I first got into this type of options trading, option selling strategies in the mid 2000s. And I think, correct me if I'm wrong, I think that you had your options linebacker site up in that time frame, like 2005-ish, 6-ish, right around then?
Yeah, 2006 is, 2005, 2006 is when I started it.
Yeah. So he was one of the first sites that I found. And just like everything else he does, he has a great way of teaching these things. His options linebacker he kind of used a metaphor of teaching option strategies like related to football analogies, right? And that was my first introduction. I've just followed him along. He's one of my favorite traders. I sent out an email last night, Doc, saying if I had to carve out Mount Rushmore of the 4 option traders who have had the biggest impact on me throughout these years, your face would be up there on there.
Oh, so, no kidding.
Yeah, probably in the first position. Who's there now? George Washington? Is he the first guy on the wall? I'm just trying to figure out where your face would fit the best. But anyway, so he's. I just recently kind of reconnected with Doc. I was in his room for a while. He has a great daily room. It's like you've really. I was there a couple years ago, and I just got back in this last week, and he starts off with this great music. That guitar music is right up my alley. He opens with that, and then he gets on there, and he just kind of goes through the whole process every morning of getting going. How he does his daily setup, how he sets all his parameters and everything, and that's super great for me.
Hey, Dan, do you recognize the music that I play?
I recognize it from a couple years ago, but not beyond that. Maybe like inside my head somewhere I do.
That was the original hold music from 20 years ago from Thinkorswim.
Oh, really?
Yeah. So
Oh, wow.
Thinkorswim used to have that music on just like rotate. And it was actually one of their employees, Colin Bunn.
Oh, wow.
And it's so I was able to get the files from that. And so
That's
no, nobody catches that though. So
yeah. So
you have
maybe,
to be around a long time.
yeah, I love it. And it now that you say that, maybe it just sort of triggers like an ancient memory of the early Thinkorswim days. Do you remember Thinkorswim used to have that thing on their little logo where you could press three of those legs and it would open up
Right.
a secret passageway?
Yeah, I forget what was in there, but it was, yeah, those are fun days.
Yeah. Anyway, we're getting off topic. But anyway, so I want to introduce Doc Severson. He has a presentation. Check out his stuff. He's got a website. And I didn't know you had, the other day I was talking with you and you mentioned you had those books. I didn't realize that you had like a whole mindset, a trading mindset kind of program or viewpoint. So you have a book on that. You have a couple books, right?
Yeah, two books, which I'll talk about in a minute. But I had to figure out the mindset thing because I was being such a dummy. I was like, why am I making these stupid decisions, and why does my brain like shut off when I'm dealing with risk, and I had to go find out why the brain does what it does. And it actually was really, really interesting when you start digging into it.
Huh. You gonna get into that, a little bit of that today?
Yeah, a little bit. I I always end up talking about the mental side of trading one way or the other, because it at the core is really the challenge that we all have to face. We have to learn to think differently about risk, about the information that we process, everything like that. We have to think differently than the crowd if we want to be successful.
Yeah. All right. Well, I'm going to hand it over to you.
Okay. Well, good evening, everybody. Let's see if I can get this to work. Okay. You should be seeing kind of a blue and purple screen right now.
Yeah, I see it.
We're all good? Okay. All right. I'm going to fire through this and I should be done, I'm hoping, in about 45 minutes. But if you guys have any questions, you can chat them in, or you can save them for the end, and we'll spend as much time as we need to. Okay. My name, again, is Doc Severson. I'm an individual trader, performance coach. I quit my job back in 2005. I was working at a three-letter acronym telecommunications company, doing very well and just hating life. Just all I was doing, maybe this is familiar to you guys, but all I was doing was sitting on conference calls and arguing with people in, our sister companies. And it was just kind of miserable. So there was this inspiration of learning to trade, and there was this desperation of wanting to get out of there. And so became an individual trader in 2005. And then what I found was it is extremely isolating. All of a sudden, for the first time in many, many years, I'm just working from home, just me and the dog. And it was, wow, there's no human contact anymore. And so little by little, people got to find out that, hey, here's the guy that quit his job and all that stuff. Can you teach me how to do this? And it was a perfect way to fill my day and help people and kind of pay it forward. So I've been involved with a lot of different services along the way, like Options MD, Theo Trade, Doc's Trading Tools, Options Linebacker. Currently, right now, I'm providing services for 12-minute trading at Dave Lucas. And I've got my own site, which is readyset.trade, as well as readyset crypto. So it's readyset.trade and readysetcrypto.com. And my specialties are fractal price analysis, which is what we're going to talk about today, which is multiple time frame, breaking things down into what are called fractals. And you'll see what those are in a minute. And options and future strategies, like how to find edge in there. And as I said before, I had to fix my own brain before I could find a way to become profitable. And I've learned so much about that. I actually wrote a book, which is on Amazon, which is called Hacking the Holy Grail. And it's kind of a unique book because I did it in the form of Charles Dickens' A Christmas Carol. So there's the ghost of trading past, the ghost of trading present, and the ghost of trading future visits this individual, which may or may not be autobiographical. Well, I'll leave that for you. And it's about the trader's guide to cracking the code of profitability. So it's what everybody goes through, why we go through it, how to fix it. And then really the topic of tonight's discussion is going to be the book that I wrote a few years ago, Fractal Energy Trading, which is also on Amazon. 4 simple rules to profit in any market and any time frame. And you'll see exactly what I'm talking about. Okay, so that's who I am. My purpose tonight is to show you a fundamentally simple system that can be used for trading any instrument. So it doesn't matter whether it's stocks, options, futures, anything, any time frame. You can use this intraday, day trading. You can use this swing trading. You can sell options with it, whatever you want to do. You'll be able to anticipate moves. Now, I don't want to fool you into thinking that you're going to be able to predict the future, but you're going to do a much better job of anticipating things before they happen. And you'll be in a position to better understand the fundamental structure of the markets. You'll see how it's built. And I'll also share my favorite indicator with you. Okay, so that's who I am, and that's what we're going to do tonight. So first of all, I am a recovering engineer. And the way I like to go through things is to identify what the problem is. So that's what we do, right? We identify problems, we understand what the gap is, we figure out what to do to fill the gap and solve the problem, and then move on to the next one. So what is the problem we need to fix? Well, I would say accurate charting, price discovery leading to trading edge. You guys all know, you've been around long enough to know that just because you put on a trade does not necessarily mean you have any edge. So our own embedded human nature ensures that we start the wrong way. We all start the wrong way. Okay, so how is that, Doc? Well, unless you're lucky enough to snag a job on the street out of college, everybody starts in the same manner, lost in a crowd. So we are herd animals. We feel strength in numbers. We feel safety in a crowd. One of my favorite things to do is to join 100,000 of my best friends and watch a football game. So it's in our nature to go with the crowd. So even if you might say that you're introverted, you're still a herd animal. Nobody wants to feel like they missed out. We all want to be part of that, part of what's going on. And we're also used to social logic. And this is something that I've seen come around in the last 20 years or so. So for the better part of a generation, we've outsourced or socialized our decision-making. So if I want to get a ninja sword, right, what am I going to do? Well, I'm going to go onto Amazon, and then what I'm going to do is I'm going to look for 4- and 5-star reviews. Never mind, I don't know anything about the people that have put the reviews in here, but I'm going to trust those 4 or 5 stars. And I'm implicitly going to think that anything with 5 stars is better than 4 or better than 3, whatever. So here's the Bacon Bros. They got 4 stars. It must be pretty good. or this katana played for $24.95. Must be great because it's got 4 stars. So there's so much freely available information and opinion, and we implicitly trust it. So we trust social opinion. And so therefore, that leads us to do social investing. So what do we do when we learn something for the first time? What is the first thing we all want to do? We want to join a crowd, because if we join a crowd, hey, we'll get better at that. Hey, I want to get stronger. I'm going to go join a gym and learn how to work out and get better at stuff. Or I'm going to join some classes and do something. So retail traders get into financial markets thinking that the safest thing to do is just to go along with what everybody else is doing. Trading becomes just another extension of social media. You guys have all heard about the Discords and the different Facebook groups that are out there. And I'm not saying that they're bad, but by and large, this is the way that retail traders think. Why can't we do the same thing as those 4 and 5-star reviews in Amazon? We'll just join a group, just play along with the trades, and then we'll make money. That's the way I used to think too. The problem is, this is where you find social investing isn't really a good idea. And I remember I saw a presentation, this was maybe 4 or 5 years ago. And you guys all know who Tom Sosnoff is. And I was at a trade show and listening to Tom speak. And I always love to hear Tom speak because he's always ahead of the crowd. And he was disparaging social investing. He was just completely against it. And he's like, how are you going to find any edge? How are you going to be different if you're just taking the same trades everybody else does? So the problem is with social investing, you're always chasing the price of an asset. You're buying at the highs, you're selling out at the lows. This is never going to work, guys. So a lot of us will go into investing media. You think the investing media is your key to knowing what's about to happen in the markets. Well, I mean, this has been going on for decades, right? Let's get the Wall Street Journal. Let's get Investors Business Daily. Let's tune into CNBC and have it playing in the background while we try to trade. And, you know, what you learn is that after a while, you figure out that the people that are the smart money, and I'm doing air quotes right now, smart money, is, they're just using these channels to influence retail. I will never forget Bill Ackman coming on in March of 2020 saying, we need to shut down the entire country. We need to shut down the entire, and it scared the hell out of the market. I mean, that's the day where the market really ate it to the downside, right? Well, Bill Ackman of Pershing Square comes on and says, we got to shut down the whole economy. That is in uncertainty, right? So what did he do? He covered his short position the day after that. Nice. And he swears up and down that, he didn't do that. He didn't mean to do, and that may be true, but that's just the way things happen. And what you find is that the guys that are writing these articles are just trying to get clicks. They're not really trying to help you. They're just trying to get eyeballs and clicks so they can sell ads. So the financial media is not really your key to finding edge in the markets. So ultimately we end up like looking for some kind of guru. We want to get away from the rabble, but the search for that guru can be very difficult. And I see a lot of people just bouncing around from person to person, just looking for somebody that's going to give them, success without any effort. And, I get to this point after about, a year or 18 months when I was on my own journey. It feels like everybody is out to take advantage of you. And I've got my own war stories of that. I'm sure you guys do too. And, it just, who do you trust? Okay, so this is how we start. This is how we start. So ultimately, you've got to find your way. You've got to find a way to make everything that you do your own. Those that make it finally figure out that we need to adopt our own plan. You need to internalize. You need to personify your strategy. So what does that look like? Well, you understand what you're trading. You've stopped trying to be a jack of all trades and a master of none. You finally know what you trade and why you trade it. Maybe you're only trading one or two stocks. Maybe you're only doing one or two strategies. It's kind of like that relief pitcher that comes out of the bullpen, which is a specialist. Maybe you're there just to get one guy out, right? You know exactly what you do and you're the best at it. You've got a plan. You have a plan and you're treating this like a business. Failure is not an option. If you fail to plan to fail. Price discovery. This is where it gets really interesting. Price discovery for the pros used to be right in front of their face. I've been to these trading pits before. It's amazing to watch. They were literally the reason why markets moved. You could just see it happen in front of your face. And so the price discovery was sometimes the sights and the sounds and maybe even the smells of what's going on right in front of you. But today's challenge, it's solitary. It's just you and the chart. You know, maybe you got your buddies, but then you're right back to groupthink and social investing. Okay. So how do we do this? How do you find your way? Well, a lot of people will find your way by saying, well, more is better, especially when it gets to charting. So this is so common, right? So when we can't get a grip on what's happening with the price, we tend to think that, hey, I just saw this really cool study and I just want to add one more study to my chart. So we all start with price only when we first start investing. And we say, well, this doesn't speak to me. I don't know what's going on here. So, well, I need to add some moving averages so I can figure out the trend, right? Everybody needs moving averages. And then, of course, you know, everybody has to have the MACD, the moving average convergence divergence on there. And no chart can be real without a stochastic on there. So you need an oscillator to tell you when to get in and when to get out. So you not only have momentum, but you have trading signals. Aha. If it were only that easy, right? So what you find is that, hey, somebody told me about the RSI and I've got to have the relative strength index on there so I know when it's overbought, know when it's oversold. And let's not stop there. Let's put John Bollinger's work to John Bollinger's invention to work for us here by understanding how standard deviations work and statistics and probability to that. And then, of course, if we're going to do that, we have to add the Keltner so we know when the squeeze is happening. And let's add the Arun oscillator because it looks really cool. And next thing you know, what you've got is, you know, a chart that is so compressed up here. There's literally no information that you can determine from this up here alone because you've occupied so much real estate on your charts. We all do this. I did this. We all do this. We all just keep adding them on, you know, and it's almost like that old fable, the Odyssey, where Odysseus comes back after being gone for like, I don't know, 30 years. Like, where you been, buddy? And he's the only person that could shoot an arrow through X handles. It's almost like you have to do that. You have to shoot it through all these X handles before you get a trade setup to come for you, right? So more is not better, guys. More is not better. In fact, if you talk to just about any professional trader, what you'll find is that they have relatively crude, simple systems. And that's kind of what I'm going to talk about with you here today. Is there a simpler way to do what we're going to do today? You'll end up trading not to lose instead of trading to win. That's the worst thing that can happen to you in your trading, is when you start trading not to lose. So what we do is, what about starting with price again? Price is never lagging. It's not a trailing study. It's not based on some derivative study written 50 years ago by some dude you've never heard of. If you want to know something cool, like find out like who actually wrote the MACD, who actually wrote the stochastics. And it's kind of interesting to learn that history. Indicators lie all the time because of the lag. Price never lies. Price to me is the ultimate arbiter of value. It's never wrong. You cannot argue with it. and it reflects everything that is currently discounted into the asset this very second. It's very efficient. But everybody says, it's hard. I can't, this is difficult. I can't read price. Well, it's not that hard. So let's get started. So that is the problem. That's what we're going to fix today. And I'm going to break this down through 4 simple rules. Okay. Your mind may actually fight you on them because it's like, well, that's too simple. So we're going to start with timeframes, first of all. I see a lot of traders arbitrarily selecting timeframes. When I first started, it was like, well, aren't you supposed to just use the daily chart? Well, I use the 60-minute chart and a 4-hour chart and this and that. And it's like, well, what's the difference? What makes one better than the other? And I didn't understand how they all related to each other. So a lot of people will just go straight to the 1-minute chart. Well, I want to know what's going on right this very second, right? And so all you're going to see is noise. So the context is very important here. Somebody following a very small time frame chart is going to get whipped around versus larger time frame charts are much more powerful, but they're not going to move very much. They're not going to give you the minute-to-minute information. So the context of the chart is massively important. This is one of the things that I love because this analogy here, because I think if you think about what's going on here, this will help you understand how you can use multiple time frame charts. So let's walk the dog. We're going to go from point A to point B. So what do we know about this? We have an origination, we have a destination. We are going to arrive, both of us, the dog and myself, will arrive at point B at some time. We will arrive at the same time together. So who sets the beginning and the ending points of your walk? Well, you do. You are in charge. Unless it's my dog, or the dog is walking me in this case, but generally you do. You're 10 times the mass of the dog, even though the dog can orbit you. So if your dog is anything like mine, if I'm going from point A to point B and I'm mission oriented, I'm not going to be taking any stops along the way. I'm just going to go straight there. The dog will orbit me. It will sniff over here, come over here, check this out, find something interesting over here, going back and forth, but we arrive at the same point. So this is a good example of a larger time frame, which is me, versus a smaller time frame, which is the dog. We both arrive at the same point. The same information is there, but you can't really see much on my path because it looks like a straight line. But you can look at and see how the dog took a much more circuitous route to get there. Okay, so that's the walking the dog. That's how a smaller time frame can fit within a larger time frame. So what we have now is we have these are definitions. We have an anchor chart. And in the previous example, I was the anchor. I was going from point A to point B. And then we have what's called a signal chart. Signal is what you're going to use to actually enter and exit. So here's the weekly chart in this case. And these are the exact same. This is the same chart. This is the same movement. Here on the weekly chart, the anchor chart, you're just seeing one big swing. Whereas on the hourly signal, you're seeing actual waves. You're seeing entries and exits that are on here. So that's the difference here. Think about anchor and think about signal. Again, the anchor is you trade in the direction of the anchor and you take entries and exits off of the signal. Now we'll get into different time frames in a minute here. So how do we apply rule number 1? Understand what larger time frames to add to your signal chart to create an anchor. Oftentimes they'll have anchor charts out there like monthly and weekly. and maybe I'll take signals off of the daily or even the 60-minute chart. I usually have a factor of 5 and quite often 25 in between the anchor and the signal charts. So understand how to read the trend and swing direction of your anchor chart. So if you have an anchor chart, which is doing something like this, higher highs, higher lows, you have an uptrend. Yes. And if something like this happens, you have a lower high going to a lower low, all of a sudden you have a change in polarity to a downtrend. Understanding how to determine these polarities, I think, is extremely important. And so what we're going to do is we're going to trade in the direction of the anchor chart swing. Trade in the direction of the anchor chart swing. So think about me walking the dog. We're going to trade in the direction of me walking the dog. And then we're going to use the signal chart to determine the entries. So if we did something like this, let's say this is the anchor chart going in this direction, nice uptrend. And if we look at this on the signal chart, we're going to see things like this. Hopefully you can see that. Let's use the red. Maybe the signal chart shows a little bit more information like this. And we want to look for pullback entries. Here's the signal chart showing us how to use that. So now we're using multiple time frames to increase our probabilities by trading in the direction of the anchor chart swing. It's like going in the direction of the tide, right? Which way is the wind blowing? We're going to look for pullbacks in the direction of that major trend. So that's rule number one. Larger time frames dominate the trend. Think of the dog walking example. The rules are simple, right? So that's rule number one. Now we're going to go to the converse of this. Rule number two, we're going to talk about reversals. So reversals are the holy grail of trading. Everybody wants to catch the reversals because that's where your best reward to risk is at. This is where you're catching the herd on the wrong foot. And this is where the price moves the fastest. So reversals are what everybody's after. Regardless of the time frame involved, a true reversal offers the best reward to risk for a trade. If you can get in up here versus where everybody else is getting in down here and about to get run over because we wait until things feel good. We wait until we trade not to lose and wait until things feel good. So once again, it's not only just the methodology, but it's also your mindset behind this. Reversals are what everybody's after. Now, you're not going to spot reversals on the anchor chart. It's just too big. It's too slow. Like in this case, like a weekly chart, it's just too slow. You'll never spot them until it's weeks down the line. So this is where we look for the signal chart. Change happens from the inside out. Think about this. One virus can infect a single host cell and then begins to multiply, and that eventually will swamp your immune system. So that trend reversal starts from the smallest organisms and progressively propagates to a larger effect. Just like it, I don't know if you've ever noticed this, but if you've driven, if you drive the same car every single day, back and forth, and then let somebody borrow it, they're like, whoa, what's wrong with your car? And you're like, what are you talking about? Changes happen without you noticing because it's so small and imperceptible that you just adapt to it. You get used to it, right? Change happens at small levels or an early warning to possible failure or reversal. So what we care about is trend reversals. So we're going to look for these signal chart reversals. And again, we talked about this a little bit, looking for the polarity. Here we have an uptrend with higher highs, higher lows, higher highs, higher lows. Still good, still uptrend. And all of a sudden we go from a higher high to a lower low, and then a lower high and a lower low. We have a reversal here. And we're going to do this at the signal chart at the smaller time frames. Or the same thing here. We have a downtrend, lower highs, lower lows, and all of a sudden we take out and print a new higher high with a higher low. We have a reversal. Unfortunately, reversals also happen right when everybody is, in this case, the most bearish or the most bullish. So you have to be able to think through that. So change propagates higher. What happens is that change happens from smaller time frames, and then it will propagate from one to another. Like if you look at a true bear market happens when you have a monthly chart actually going into lower highs and lower lows. And it doesn't really turn into a bear until you have that. So a daily reversal will fit within a whole weekly swing, but here's the weekly reversal. So reversals start at smaller time frames, they propagate higher. So how do we apply rule number 2? So understand what smaller time frames to use for your signal chart to help spot changes in trend faster. That could be an hourly chart, that could be a daily chart, could be something smaller than that. Understand how to read the trend and direction of the smaller time frame chart by understanding the polarity. Trade in the direction of the anchor chart swing, remember that's rule number 1, until you see the signal chart reversing. So reversals come from the inside out and they propagate higher. That's rule number 2. Now we get to rule number 3. This one's simple. I was surprised I never really thought about this before, but it's just straight physics. So what goes up goes down. What goes up must come down, vice versa. Rising patterns will eventually break to the downside. Descending patterns will eventually break to the upside. What rises must eventually fall, and what falls must eventually rise again. This is simple physics. So what we're looking for is things like trend lines. If you draw trend lines on your signal chart, eventually what you'll see is around the time that you see a reversal is around the time that the trend line is going to be broken. So trend lines are not supposed to be a signal entry. They're not supposed to be a signal entry. There's a lot of people that have spent a lot of time and are very, very serious about the fact that break of a trend line is not supposed to be an entry. You're supposed to wait for some other signal to come along. But it's usually a pretty good hint that you're about to see something change. Okay, so how do we apply rule number 3? Told you this one was simple. So this works in every time frame. Obviously, you'll see more instances of this on a smaller time frame, like intraday time frames. It certainly is open to interpretation. It's like everything else in trading. It's somewhat subjective. Sometimes false breaks will occur, but eventually there's going to be a no-doubter break, and the cycle will continue. Use this as more of a filter than an actual entry and exit signal. This adds confluence. So what we're doing is we're stacking up evidence. We want to stack up evidence for our thesis, right? You don't want to take a signal just off of one data point. You want to start stacking up your odds like this. Again, that's not necessarily trading not to lose. That is trading to win if you can at least stack a couple of these on top of each other. Okay, that's rule number 3. We're flying through these now. Rule number 4. Expansion leads to contraction and vice versa. So this is going to be, we're not going to talk about price now. Let's talk about overbought and oversold. Everybody loves to talk about, well, it's overbought. It can't go any higher. Guess what? In a world where there's no limit on money printing, I don't think that's necessarily true. What is overbought can stay overbought for a long, long period of time. What is oversold? What's the one thing I've learned is that tops are a process before they release lower. Bottoms are more of an event. Tops are a process. Bottoms are an event. That's just the way that the market works right now. You've all heard this one. Markets can remain irrational longer than you can remain solvent. So if you're going to trade based on, if you're going to take counter trend trades based on, well, it's overbought and it's hooking down. And how did that work out for you? Not too well. Not too well. And not to say I didn't do this as well too, right? I used to get angry at the price because, hey, it's not supposed to do that. And I had to unlearn that, right? So this is something we all have to do. Markets move differently. Instead of overbought and oversold, what I think that they do is they move like humans do. They move as far as they can, and then they rest and consolidate. And then they move as far as they can again, and then they rest and consolidate. It's kind of like going on a long road trip, right? You could drive as long as you can. Maybe it's 500 miles. And then you're going to find some hotel somewhere. You're going to consolidate. You're going to save up your strength again. You're going to get ready. You're going to eat. And then off you go the next day. Range expansion leads to range contraction. If you're going to climb a mountain, you're not going to summit that thing in one day. You're not just going to run up the side. Well, Mount Everest is only, 30,000 feet, 29,000 feet. That's what, 6 miles? I can do that. I can do 6 miles in a day. You're not going to do that, right? So you got to go as far as you can. You're going to go to base camp 1. You might spend a week in base camp 1. All of a sudden you have to learn how to breathe thinner air. You're going to go to base camp 2, base camp 3. Maybe you'll summit at that point. This is how everything moves. We go as far as we can, then we rest and consolidate. This is how markets operate. Markets copy nature. Again, I just did this Everest thing, and this is the base camps here, but this is how everything works. There's no overbought and oversold. There is only range expansion and range contraction. Now we can see this on the charts, and I've got what I use called, I call it fractal energy because that's what it means to me. You can also find this through some charting programs called the Choppiness Index. So not all of them support this, although you can get like custom code if you want to use this on Thinkorswim. So what this does is this shows the linearity of the trend. Linearity is like, this is a linear move. If you see the price doing something like this, that is a linear move. This is a non-linear move. Okay, so you see the difference. This is range expansion. This is range contraction. So when we have range contraction like this, it builds up the energy to the point where it's going to move in one direction or another. We don't know which way it's going to go. And conversely, when the price moves in a very linear fashion for a period of time, we get into exhaustion. And then we expect to see the price consolidate for a period of time until it's ready to go. Range expansion again, range contraction. It just goes back and forth between these two modes. We can use this intraday. We can use this on time-based charts. We can do this with just about anything that we want to. It doesn't matter what form of charting that we use. It doesn't matter what time frame or context of chart, whether it's swing trading, day trading, you name it. So let's talk about rule number 4 now. This will give us an early warning when a consolidating price chart, and I'll show an example of this in a minute, which is, hopefully you guys got a piece of this. So when you have a market which is just doing this, we know when it's about to move. we have a really good idea of when it's about to move. And conversely, if we have a price chart doing something like this, a very linear move, we have a good idea of when it's going to falter and move into a range bound. We have a good idea. And your brain should be clicking right now saying, hey, wouldn't that be useful for doing either swing trades or iron condors? You betcha. So a weekly exhaustion signal means that we might see several weeks of volatile trendless action. Conversely, a weekly charged signal might tell us to expect a major break in price. So I use this linearity of the current trend to determine exhaustion and charge levels. And this is what drives all of my trading through different strategies. And I try to keep things simple. So that's rule number 4. And then I apply that with what we do with all the price work that we did, the first 3 rules. So let me give you a couple of examples. These are, this should be familiar to you guys. This is what GLD was looking like back in late July or August. So for those of you that understand chart patterns, you might recognize this as an ascending triangle pattern where the measured move is the open end of the triangle. But really what I want to call your eye to is this weekly chart had a huge amount of potential energy. So this is what we look at. We look at this almost like a fuel gauge. This is full and this is empty down here. So when this is full, boy, this thing is about ready to lift off. And that was gold, right, this summer. And how that resolved, you guys all know that. Boom. We don't know exactly when this is going to go. All we know is that there's a huge potential for this to move. So all we did was we set up an out of the money vertical call spread at what we thought was the measured move target. And we gave ourselves a couple of months to be right. And it just sort of wandered right into it. It was great. No stress. It was a cheap trade. Pretty amazing consolidation breakout. Now this is probably an extreme example of this. The move that we've had in gold over the past year has just been unbelievable. But you will see things like this. You will see markets moving from range contraction, where you have a huge amount of potential energy, which is right there. And what happens? It moves. It moves to the next. It's almost like it's moving from floor to floor to floor, right? It goes into exhaustion. And once it goes into exhaustion, it will park itself. And that's when you can put on iron condors through something like that. Is it going to work 100% of the time? No, nothing does. But you do improve your odds. You give yourself some better edge. And that edge is not reflected in the option chain. So you're not part of the herd. Okay, so that was GLD. And here's a current chart of the SPX. And it's no surprise when you look at this, I have a monthly chart which is in serious exhaustion right now. That is one incredibly linear trend that we've had since the bottom of the tariff tantrum in April. And so do I expect a reversal off of this? No, but I do expect range expansion to move to range contraction. Similar to what we saw in the summer of 24, where we saw quite a bit of shake and bake. That's what I'm expecting to see right now is some uncertainty and some corrective price action. And that's been starting now the last few days. And while it does that, the energy builds up in these. So it could release to the downside at this point. And so we use our first 3 rules to understand which way it's actually going. Okay. Let me wrap things up for you guys, and I'll take some questions here. So where do you go from here? Where do you start? Well, let me go back to this. It's my belief that everybody needs to shift to price and energy-based analysis. I really do, because I think it's so much easier. So instead of going through the old, MACDs and stochastics and RSI and the typical, let's add one more study kind of thing. Use something that's more integrated, use something that's price-based, and use something that's energy-related that is mimicked in nature. So again, how can you start? Consider joining our community at readyset.trade. So what we're looking for is a way to make $100 a day. That's really what we do. I mean, if you have more capital than that, you can certainly extrapolate that out to whatever you want. But we use fractal energy trading, high probability strategies, all the other intangibles. We're trying to identify what is the edge of the current market. So think about this for a second. Goals are for people who care about winning once. Systems are for people who care about winning repeatedly. This is what we do. We have a system. And so there's a couple of things that we do out here. We run, I run a lot of online classes. I've got signals coming into the room based on some strategies that we've predefined, which are based on fractals. Okay. A lot of different, I do a live session every day from about 9:20 Eastern time until about 10 o'clock or so. There's no need to go any longer than that. I've got several courses out here as well too. So one of which is the Fractal Energy course. So if you go out to readyset.trade, you'll see in the left-hand sidebar, I've got a number of courses out there. You can click on that if you want to know more. This is a $99 charge for the Fractal Energy course. It's got 15 modules to it of PDF and video, and you have access to me for questions. So if there's anything you run into on this and say, I don't get it, or can you show me an example of this? You're certainly just one email away from getting an answer on there. So you can get this online tonight for $99. Or if you want, what you can do is you can join our trading room. And this is where we go over this stuff every day. And it's about $64 a month. You can cancel anytime you want to. There's no hassle on that. It's not like, we're not like Sirius XM or anything like that. Like, well, we're going to have to run you into our cancellation program. No, we're not like that. It's just me, guys. So if you go over to the Elite Inner Circle on the left-hand sidebar of our website, you'll see this option here where you can join. So for either a monthly charge or you can do a whole year if you want to at quite a reasonable discount. Okay, so that's who we are. That's what we do. And just a couple of things that if you wanted to take one more step towards your trading goals, you can certainly get a little bit more information. Okay, so with that, I'm going to open it up to any questions. I'm going to, I'll just keep this slide up in case you guys want to know how to get to that. But if you have any questions or if you want me to look at anything, I'll be happy to do so in the time that we have remaining tonight.
All right, cool. So we have a question from Jerry in the chat, and he asks, how much capital is needed to make $100 a day?
It depends on what you're doing. Like, my preference is to use low probability strategies, which have a 1-to-1 or thereabouts reward to risk. So if you're going to do something like, if you're going to do like Zero-DTE on the SPX, you're probably going to need, I would say, at least, the margin for a trade like that per contract is about like 1,900, something like that, 1,900 to 2,000. But I would probably want to have at least 10 grand in there to do that. Plus, if you're going to do Zero-DTE, you'd probably want at least 25 grand. So you're not being hit with the pattern day trader, things like that. But really, if you're asking the question about $100 a day it's more about coming up with a methodology that works for you. So there is not one single thing that says, okay, if you plug 100, X amount of capital into this, you're going to get $100 a day. So it depends on the different types of opportunities that we have. Like, not every market is the same. Sometimes we have simple markets that you can trade easy directional trades and do like in-out spreads, things like that. And those are going to, for like a $2 wide spread on, say, like a spiders or something like that, that's going to be, $100 at risk, and that's it. So it's possible to do that with a very small account if you're using ETFs and limited width spreads. But it's always easier to do something like that with a little bit more capital. But I would say, just generally, if you're going to try to make $100 a day, it's probably best to have at least 10 grand.
All right. Anybody else? I have a couple of questions, but I want to put you guys first.
Yeah.
You can just
go
ask,
ahead.
you can just ask audibly too if you want. Or, well, wait. I have a couple of questions real quick, Doc. So early on in the presentation, you were showing how the lower highs and the lower lows, and how we kind of are able to see a change in trend when that changes, when the lower lows and changes, and then we get a lower high, or we get a higher high, and it starts to move the other way. I'm referring to.
Right. Right.
Now, how is that? Just that alone, is that pretty consistent? Like, I mean, can you rely on that, or are there a lot of fake outs with that pattern?
Well, if we look at something like this, I mean, it depends on what so this is like a 1,000 tick chart. So if we're looking at, let's look at what we had this morning. So we started out at this price, go up to a lower high, lower low, lower high, lower low. Then all of a sudden what we do is we go to a higher high, higher low. So right there is a reversal. What I'd like to use is the anchored VWAP intraday as sort of like it's bullish above it, it's bearish below it. It's sort of like a dynamic support and resistance. And the price tends to cluster around it. And so I would probably go for a long at this point. But you've got your change in polarity at this point. So it's just a question of, looking for the change. You've got everything still going here. You hit the upper expected move, and now there's a lower high, lower low. Now things are starting to fall apart. So this is one potential way to look at this and as you get into areas like this, the top of the opening range should be support. It's not support anymore. And there's a lower high. So this actually would be your short area for today in this area. So there's quite a battle here. So is everything going to be perfect? Probably not. But let's go out to the daily chart and look at this on the daily chart, like on the S&P. So looking at this one, here we have, this is where we had to, that was a nasty lower high. So that is the traps occur off what people think is going to be. When people see this, they go, oh, here's the bounce. And then this creates the trap because that was the Freedom Day or whatever it was. Okay. So that's all downtrend. That's all lower highs and lower lows all the way along there. And then here's a lower high. Same thing here. But then what's this? That's a higher low. So this is what we will look for. So again, guys, I'm not here predicting the future, but what I'm looking for when we were back here in April was I was looking for, hey, I wonder if it's possible that we'll get a higher low. Because what's happening here? nobody was on board for this short. Maybe a few of the smart money people were on board for this short. Hardly anybody was on board for Freedom Day short. And now what's happening is everybody now is on board. Okay, I've got it. I just Googled how to short stocks. This is what people are waiting for. Nobody gets these entries until this one. This is the one that they get. And so this is where all the, what's called the weak hands jump on board. And so what is the smart money looking for? The smart money is waiting for the weak hands to jump on board where they can take this thing off of a higher low and squeeze them all out. So this is where the change in polarity happened right there. And so again, you're not predicting the future. You're not saying, hey, I just got a signal from my study here. What you're looking for is you're understanding how the price waves are moving with the higher lows and higher highs. This is Dow Theory 101 from the 1930s. And so right there was where everything changed. And after that, it was a series of higher highs and higher lows. And guess what? Nothing more than a 3% pullback all the way along here. So that's what we do. We look for the polarity to change. So in this case, the daily chart was more than adequate to identify that. Does that make any sense, Dan?
Yeah. Yep. Totally. Okay, cool. I also wanted to ask, is the choppiness indicator you showed earlier the same thing as the fractal indicator you showed towards the end?
Yeah, the fractal energy that I have is so like on Thinkorswim, there is no such thing as fractal energy or choppiness index. It doesn't exist. So for a better part of 15 years, I found somebody that programmed it. There was a guy by the name of E.W. Dreiss, who is the guy that invented it. And so I was able to find somebody that let's see, I've got this also on like this is TradingView. Mm-hmm. And TradingView, I've got the fractal energy on here, and it's available through the public. So if you go on to indicators in public, you'll see the choppiness index or fractal energy, or in this case, what I've got is called the RSI Laguerre, which is something that we did at Theo-Trade. So it's available on different platforms like who else has got it? TradeStation does not come with it natively. So it has to have custom code for TradeStation. Who else has got it? I think I had it up on the slide there. So like NinjaTrader, you can do it through custom code as well too. But
so we have public access to get this in TradingView?
Yeah, in TradingView. It's so if you search on choppiness index, you've either got this or you've got Chop LRSI, which is something that I uploaded a long time ago, or I had other people upload it. MRX the unknown, right? So there's a lot of this out there. So TradingView is probably one of the easiest sources to get this study from.
Hey, Christy, shut Dallas.
Sorry. Okay, cool. And so, and also, so on the one you have up right now, there's that yellow line in the middle. What does that represent? The blue line is what you were referring to throughout the presentation, but is the yellow line something different?
No, the yellow line is the one that I was referring to.
Oh, okay.
And the blue line, this is a signal. This is called the RSI in Laguerre time. Okay. So this is just a simple Laguerre time is not linear time. So this is I've got this set up on my platform for long and short signals based on the algorithms here.
Okay.
So it's a nonlinear time-based oscillator for doing system trades, long and short.
Got it.
And so it's interspersed with the fractal energy in the yellow.
Right. So then Jerry asked, is the fractal energy indicator proprietary? So I think that we answered that one.
No, it is not. It is not.
Okay. And then does this work on like really small time frames, like a minute?
Yeah. Yeah, it works in every time frame.
Oh, okay. And then how do you like with your gold example? I mean, maybe I missed something, but like once you see that fuel tank get full, how do you know which direction it's going to move? Or
Okay, that's a great question. Okay, so let's go to gold. Okay, so what is it's quiz time. What is rule number 1 that we went over tonight? Anybody can answer this one. Rule number 1 says larger time frames dominate the trend. So on our monthly chart, we clearly have a pretty robust uptrend, right? With higher highs and higher lows. So this does tilt the playing field in the favor of a break. So to your point, 100%, when we have a large energy spike like this, the price can go either way. I have to do my analysis as objectively as possible and say, hey, this could break either way. And so sometimes I'll even do something like a straddle or strangle or a long iron condor when I say, hey, I think it's going to go in this direction, but quite honestly, I don't know for 100%. So I'm just going to play this where I could make money either way. So that's one way to handle it, but it's certainly a lot more efficient if you've got a strong feeling that, like with gold, the trend was so strong in this one that I was like, you know what? I'm not going to waste my money putting on put spreads. I'm going to do out of the money call spreads, and I'm just going to make this really simple. So we had a huge energy spike there. So it was just a matter of time before this thing finally broke 320 and took off.
right. Cool. And your setup here, you have 3 charts. One's a month, one's a week, and one's a day.
Yep.
Yeah.
And I've even got, I don't use this that often, but I even have, let's see, I've got monthly, weekly, daily, and 78-minute as well too. 78 minutes is 5 times faster than a daily chart of 6 hours, 6.5 hours during the cash session.
Hmm.
So this can be useful to understand, like you even see it work on smaller time frames here. Like there's a big energy spike through here, and then that released lower today, right? So it started, hit exhaustion, built up the energy spike, released. So this can be used in all sorts of time frames. And this breakout to the upside, which everybody chased after, went into some serious exhaustion here. So this is where I said, please don't chase after this. Don't chase the longs here. Wait for the pullback. Now we get the pullback. Now we're going to see whether or not this actually finds some support or whether it bounces up to a lower high and then eats it to the downside. So that's very common to see something like that. So if this wants to, if the weekly chart wants to participate in the downtrend, what you'll see is a trap up to a lower high and a roll down here. And then this will start the weekly chart pulling down. And then eventually the weekly chart will join the party as well too. So we'll just have to see, how serious this market wants to correct right now.
Yeah.
We're already down 39 handles after the hours, though. Wow.
All right, cool. Does anyone else have any questions for Doc?
Hey Doc, what in your room do you focus more on those three charts at the daily time frame as your signal then, or?
We'll use all sorts of. It depends on what type of strategies that we're looking at, but generally, I mean, every day I will bring up the S&P and look at the monthly, weekly, daily, and say what's going on here, and then we'll go over to the intraday chart and we'll set up the expected moves for the day. We'll set up the anchored VWAP. We'll look at the opening range. We'll see what's happening with the internals and kind of map out the day and, see how the day's starting and see, whether it's moving in line with the trend, which way the trend is, and where the odds are. So I thought this was really interesting today where the price, showed strength early and tried to close the upside gap and then hit the upper expected move and said, that's it for today. So, we will look at those levels and trade against them intraday, or we can take much longer term positions too.
Thanks.
Yeah, the room, I really enjoy the room. It's like a Zen getting started ritual. You just kind of get in there, set the levels. You usually, you were saying you have you kind of cycle through different strategies, or you have a handful of strategies that you just use in different market environments, like the whatever the current market is.
Well, what we were doing last week into, what is today? Tuesday, Monday of this week, is we saw this exhaustion signal on the daily chart. And so I said, I'm going to hit this thing as hard as I can. And that was like last Wednesday, Thursday, Friday, Monday. And what I would set up are what I call low probability iron condors. So they're going to be like the 1-to-1 reward to risk. So this reduces your risk and it speeds things up. What I hate playing, I used to do this a long time ago, the old, super wide iron condors, where you're literally looking at trying to make, pennies, here's your zero line. I used to think, well, this is the greatest trade in the world, until price gets over here or down here. So now I'm playing like close quarters combat with the price. I'll go right in there and try to get a nice fat credit, and I'm usually out in a day or two with 20%, which is pretty reasonable.
Yeah. And you have a really cool Zero-DTE butterfly trade that we just did a video on. I haven't put it up yet, but keep your eye out for that one. That's a cool trade as well. So,
any other questions? Anybody?
I have this is Jim. I have a question. I forget his last name, John, somebody who created the squeeze indicator.
Oh, John Carter.
Yeah. And so it seems like the strategy also there was waiting for energy to build up. And then when the red dot or the orange dot comes, so that's a predictor. So how does the fractal energy indicator, how is it different than that, I guess?
It's different in one major way. So what the squeeze was good for was identifying like periods like this. Like this is equivalent to what a squeeze would show. So squeeze would show, okay, we have a high probability of something moving and lifting off or, breaking one way or the other. So the squeeze would be the same thing. The squeeze did not predict the direction. It would just predict, okay, now you're in a squeeze, you should expect to see. And I believe John would actually add momentum to it, and he would use larger time frames. But what's different about the squeeze is that the squeeze did not show exhaustion. It didn't show the complementary condition for this. Like to John, the squeeze goes in perpetuity, and he just keeps, raising a stop until he's stopped out.
Okay.
But that's what's different here, because you're going to see markets move like that, and then when they move into exhaustion, you can take advantage of that too. So not only just the directional coming out of a pattern, but also in when it falls into corrective or consolidation, you can take advantage of that.
Through using a strategy.
Like iron condor or calendar or some type of time spread, whatever you want to do. Or even a naked strangle if you got the capital for it. So
Yeah, and the guts.
yeah.
Is that good, Jim?
Yes, that helps clarify that very much. I have to run, but thank you very much, Doc and Dan.
Yeah, thanks for coming in.
Thanks, Jim.
All right, anybody else?
Thank you, Dan, for having me on.
Yeah, why don't you go ahead real quick and just kind of how can people follow your stuff? Do you have a YouTube channel? I don't remember. But you have readyset.trade, which is like a really cool.
Yeah, readyset.trade. So let me bring up that slide again.
Oh yeah, and I was going to ask you that. You mentioned you can get this fractal course for $99 with the room. Does that include that same course, or is that
It does.
Yeah,
it does. So it's actually a better deal if you go into the trading room,
right? Because
you can get the course
plus a ton of other courses, right?
right.
Yeah.
So you get those as long as you're a subscriber. You have access to those.
Yeah, he's got a ton of stuff in there, a bunch of courses and training, a whole truckload of options trading goodness. So check it out. And I'll leave a link to his site in the description below, readyset.trade. You can find that link in the description below. So be sure to check that out. And I'll also include the links to my stuff, my website, my Discord, my free trading school. Those are both free to join, and we'd love to have you join us. We got a great options trading community there. And I'll also include a link to learn more about the type of trades that I'm personally doing, my levitation trades, and these option structures that I create that float above the zero line, where we can wind up with free trades that can make money no matter what. Levitation trades. So I'll also include a link to that so you can check that out. All right, that's it for this one. Thanks again, Doc Severson, for coming on and sharing all this great info with us. Very much appreciated. Everyone go over and check out his stuff. I'll leave a link to him in the description below. Go see what he's got going on. That's it for this episode, and we'll see you in the next one.